Guys, welcome to Monday, what is today? December 8th. So, big decision this week by the Fed. As you know, basically Trump said, I found my new Fed chairman. This is going to be awesome. Powell's on his way out. This Fed chairman, he's hoping that drops rates 2 to 3% total. That's egregious. I want to remind everybody, till I'm blue in the face, dropping rates just to drop rates is a bad idea. We complained about inflation. That's what dropping rates does when you don't need it. It's inflationary. Why? If you drop rates, borrowing costs go down. People buy more stuff. When people buy more stuff, we have to hire more people. When more people are hired, we have more jobs, less unemployment. Sounds awesome, right? It sounds good, but remember, nothing in and of itself is good. All of a sudden you have more people getting jobs, more demand for workers, worker wages go up. Still sounds good until you remember that it's inflationary. When wages go up, product costs go up, building costs go up, everything goes up. That's the inflationary part. That is an important thing to remember. I'm not saying it's good or bad. You got talking to a guy with major bias here. I have 1,000 apartments upstairs. I have 60% of my net worth tied up in real estate. You better believe I want inflation. I absolutely want inflation. Inflation is the best thing that ever happened in my life. If we had 5%, 6% inflation for the rest of my life, I would be in heaven. I'm teaching you this to show you guys there's no free lunch. It all sounds great. We hear like, oh, I can get my mortgage at 3% again, or I can go refinance. Okay, you can, but it'll come with some. Remember what happened with inflation? People were screaming. Why? Because everyday people couldn't afford the basics. This is really important to remember. Dropping rates when there's no economic need for it is an inflationary act. Usually you drop rates because you need to spur economic growth. Why? Because economic growth is stalled. Right now, though, we see stock markets at all-time highs. We see everything going crazy. We see people in love with Bitcoin over 401ks. These are the things that scream, is this okay? Valuations are insane. Guys, the current valuation of the stock market is almost 130% overvalued. Overvalued by two of the most reliable metrics in history. Now, I know a lot of people don't want to hear that. We want to put our head in the sand and go, that's not true. It is true. Doesn't mean it has to end up the same way, but it is true. We are overvalued based on history. The objective facts are that as such. There's a certain ratio the stock market should be relative to the U.S. economy. And it makes sense. If the U.S. economy is this big, the top 500 companies should be some percentage of that over time. Now, is that going to fluctuate slightly? Sure it will. 10-year earnings on the S&P, there should be a certain ratio in which that happens. We're sitting at over 40 times multiple on the last 10 years of earnings. If you took all the last 10 years of earnings, brought it to today with inflation, and divided by the current stock market by it, you're at over 40 PE. That's a lot. It's supposed to even out all the fluctuations. You got a price to sales ratio that's the highest it's ever been. With that said, I do believe that 100 years ago, the price to sales ratio was a lot lower because the margins weren't that great in companies. Because in order to have a successful business, you had to build stuff, you had to build factories. It was a lot more capital intensive. Nowadays, there are several multi-billion-dollar companies with less than 1,000 employees, some with under 100 employees. So the margins are much better, so that justifies a higher valuation, a higher price of sales. So I do think those things matter. The question is, how much should it matter? Now remember, guys, if you're new to this channel, I'm not here to tell you you must think like me. I'm here because I want to offer a different perspective of thinking rather than what I see on the markets all the time, which is things are great. Go buy this stock. It's going to the moon. No, every investment is the present value of all the future cash flow. Intelligent investing, smart investing, successful investing is not about picking the right stock today. It's about picking the right stock for the next 10 or 20 years. And that's a hard thing to do. You might sit there and say, I don't want to wait 10 or 20 years. Then maybe investing in individual stocks isn't for you. The good news is you can still make a killing. In fact, you'll probably outperform all your friends by investing in low-cost ETFs. I do it still. And I like picking individual stocks. I still invest every single month in low-cost ETFs because I want to keep my money active. I want to get the habit of always investing. Now, speaking of which, this concerned me. Guys, everybody here knows I don't look at Bitcoin as an investment. Spoiler alert, I don't look at gold as an investment. But Bitcoin, I believe, is even worse. It's this digital currency that everybody says, well, it's very rare and that's why it's worth a lot. Well, so is gold, and gold is up, but it's not up like Bitcoin is. So is, and I said this recently in a lot of videos where I said, if I take a shit in a bag, put it in the middle of the street, that's the only shit of Paul Gabriel in the entire world. That's very rare. Does that make it worth something? No. There's got to be more than that. It's got to have use. Gold has use. Bitcoin does not. Oh, Paul, yeah, you can buy stuff with it. Okay, great. Go buy stuff with it. I have 1,000 apartments. I do tons of real estate deals. I buy houses every single year that I can do. I've never had anybody say to me, hey, you paying with Bitcoin with that for that one? Not once. Not one time. Never had a title company say to me, hey, Bitcoin? And everybody loves Bitcoin because, oh, it's off the radar. It's not off the radar. The government would never allow people to do transactions off the radar and not being monitored. If you think that, you probably don't know much about history. The government doesn't want people to be able to do things without them knowing about it, especially things with Bitcoin, especially internationally. So I believe with Michael Burry that Bitcoin is the modern day tulip story. If you don't understand the tulip, it was the first bubble, like really that we really talk about. The tulip prices in the Netherlands, wherever it was, went to the moon. Everybody bought. Sir Isaac Newton bought a ton of money in tulips and lost a lot of money doing that. It's the modern day tulips. And I think at the end of this bear market, when this bear market finally starts and then ends, you'll see a massive decline in the crypto market. But here's what I find interesting. Young men aren't investing in a 401k for retirement. They're banking on Bitcoin. Here's the scarier part. You ready for this? 26% of young men own cryptocurrency and 28% own any crypto-based asset. That's higher than the 21% who have a 401k, Roth IRA, or similar retirement fund. That is concerning. I saw an article that said, hey, I put all my money in Bitcoin. Why isn't everybody else doing this? Look at the people doing this. Look at the people who are opposed to this. It's all the best investors of all time. And if you find somebody who you consider a great investor who backs crypto, they're not a great investor. Like, what's his name? Miller. Everybody thinks, oh, Miller's a value investor. No, he's not. He's not a value investor. Everybody thinks he is. He says the right things, but he doesn't behave that way. Bitcoin is not an investment asset. And when I see things like this, I just go, you know what's going to happen? 3 or 4 years from now, 5 years from now, whenever this market, it's purely a tech play. Whenever the NASDAQ goes down hard and crypto goes down even harder, people are going to say, guys, come on, it was so obvious. I mean, people believe in the digital currency. That was so stupid. Come on, every kid in the world had this thing. It was obvious it didn't make sense. We'll see. And yes, I've looked wrong for quite a few years now. I'm cool with that. I'm absolutely cool with that. We'll see what happens in the future. In its current form, it's not going to work. And if it does get adopted by the U.S. government, I assure you it's not going to become this volatile asset that it is. Go look at the volatility of the U.S. dollar. It's not volatile like this. This is insane. This is absolutely insane. So guys, you've heard my musings. I talk about this all the time on this channel. The Fed will make their decision. The Fed will have their decision this week. They'll meet. They'll have a great time. They'll probably, let's actually go look it up, actually. Before we go further, let's go look at the CME group. CME group, I want to see the Fed Watch tool because this thing was fluctuating like crazy lately. Oh, all these pop-ups. Oh my gosh. Look at this. It's back to 90% chance of a cut this upcoming week. 90%. Wow. 1 month ago, it was 67%, and it fluctuated even harder where it was actually majority chance that it was going to stay the same. This is how much this stuff fluctuates. Remember, guys, I don't care what the interest rate is. I believe in the Warren Buffett mantra that if the Fed chair was in my ear whispering what he's going to do with interest rates, I wouldn't change the way I invest. When I first heard that, I was like, you're crazy. Now I'm like, oh, he's 100% right. We're here to buy great companies at great prices. We're here to stay rational. When everybody else is going crazy, having FOMO, being scared, we will stay rational. Thank you for your time.